Just about everyone's asking about three things when it comes to this. First of all, why GameStop? And do you see any form of illegal synthetic shares or whatever it might be, illegal shorting? And what are you doing to fight back against this?
We were blessed in the GameStop community today with 2 appearances from Ryan Cohen. We had that kind of sleepy morning interview on CNBC with Andrew Sorkin. And then later in the afternoon, a much more chipper Ryan Cohen being interviewed by Charles Payne on Fox. And Charles Payne doing an excellent job of asking real questions that we want answers to. And so let's just listen to a couple key highlight moments. And I want to give you a couple thoughts about this fantastic interview and Ryan's answers to Charles Payne. Let's get right into it.
And let's be honest, your emergence as a CEO of GameStop has been uplifting. It's created a rock-solid groundswell of believers. And so what I did is so many of them reached out to me on X. I told them they could help me ask you the questions today. So this is what we're going to do. I'm going to get the first question to you. It's from a guest. He's one of my favorite guests. He's loaded up on your stock, Kip Herriage. And his question is, share your views on financial engineering in the GameStop way and give us a snapshot of what GameStop will look like in 5 or 10 years. That's what everybody wants to know.
I don't have a crystal ball, but if you look at where the company was from when I joined the board in January of 2021, and a few $100 million of debt, losing hundreds of millions of dollars, to where the company is today, $19 billion of cash on the balance sheet, and the retail business is running profitably, then if you may be able to extrapolate and see where we will be in the future, but time will tell. It depends on macro conditions, but we'll see what happens. But we've come a long way in a really short period of time.
Ryan Cohen touching on the solvency and liquidity, the stable balance sheet that he's been able to put in place here at GameStop, and now the point that we're all excited about, the company finally getting able to pivot to a point of profitability. And he touches on the importance of being able to extrapolate out the future of where things might go. And this kind of touches back to the conversations that we've had over the past couple days, which have been focused on valuing GameStop right now, because there's still a lot of you who are confused why Wall Street is not giving value to the stock, because they're looking at the past results. And I've been trying to convey to you how Wall Street is looking at it. How we, though, are looking at it as investors. The reason that we're buying the stock is because we are thinking more about what is the potential, where is the direction that Ryan Cohen is taking this company, and what is the potential of that cash that he has on the balance sheet. And he's going to talk more about that cash coming up here in just a second.
It's TBD in terms of the future of hardware. So we've got a much larger collectibles business today, and generally the business is much more efficient. It's going to be a smaller, less stores, but more profitable company. And most importantly, we're generating profits every single quarter now.
More words of wisdom from Ryan here, talking about the shift into profitability for GameStop every quarter. At least that is our anticipation based on things that he has said recently. And I think, as we go into my evaluation of Q2, this might be the first one that we can really get excited about, because it is going to be much easier to forecast those profits from here going forward.
Let me ask you about these earnings, the last earnings release. It's really, to me, it was pretty evident when the number came out. Everyone was focused on Bitcoin. Right, and everyone thought you would, because you had so much money, that you would have bought more Bitcoin. What's the Bitcoin part of the strategy here?
I look at it as a hedge against inflation, a hedge against global money printing. We've already made an investment, and we'll see. It depends on the price. So I don't want to lose money. That's the most important thing. And something could be a really intelligent investment at one price, and it could be totally idiotic at another price. So I also, I haven't called our shots, but we may buy more Bitcoin, or we may not buy more Bitcoin. We'll see what happens.
For me, I love hearing the cautionary, professional way that he is looking at managing the company's money. He's trying to be intelligent about buying Bitcoin and not just pile $8 billion into Bitcoin at these prices, which, a lot of the Bitcoiners out there wanted GameStop to do, but I think he's being a bit more judicious about it, and I respect that.
Okay, so you're sitting on $9 billion. I want to share one of the posts we got on X because people are saying, okay, it's a lot of cash. And some want to see you put it to work. One question is, would you consider a dividend or even a special one-time dividend?
The thing with the dividend is you got to pay tax. And so, I look at it as in, I own just over 8% of the company, and granted, we better not do something foolish. But if we don't do something foolish, then we're better off keeping the money in the company and looking for the right opportunity than going and paying a dividend and paying taxes.
I have not checked social media or Super Stonk yet to see what all the chatter is about Ryan's answer here about a dividend, but I imagine it probably upset a few people. If you are a regular viewer of this channel, you know that I am not in favor of any of these companies wasting their cash on dividends when they need to rebuild the business or establish profitability. Depending on the company that we're talking about. I'm just saying in general, this whole thing of people thinking that a dividend is going to root out a bunch of naked shorts, I think is a bunch of hogwash. And we see a few shady CEOs in smaller companies that are massively losing money, or in some cases have no revenue at all, trying to use dividend tricks to lure investors in so that they can raise money by selling shares. And I respect the CEOs of these bigger companies like AMC or GameStop, where they have been professional and they do not give into this temptation to throw retail a bone which is not going to work to do what retail wants, because these company managers know that having that cash on their balance sheet is important. And Ryan gave taxes as a reason, but just in general, companies don't raise money just to turn around and pay it back out as a dividend. If they did, I would say, that's not a very good, I have said, that's not a very good management practice. So I'm glad that he shut this discussion down, and I would rather see him put that money to use to create a multiple of earnings than just to give us a couple dollars back or a dollar back, whatever, because that is not going to do anything to cause a short squeeze. It is just not, and that is my opinion. And it's okay if you have a different one, but I'm glad Ryan addressed it, and I am fully on board with what he said here. No dividends.
You did the hardest part. You cleaned up a business that was awful. But this next leg up, are you being too cautious? Folks want to know, where are you looking? Where's the magic coming from, the Ryan Cohen magic? Where exactly is that going to come from? Because it's not going to fall in your lap.
It has to be the right time. We are in a position today where the retail business is profitable. Maybe the future value, when you think about GameStop, has more to do. Again, this is a guess, but it may have more to do with how we deploy our balance sheet than the cash that the retail operations will generate.
Important point from Ryan there, talking about the profitability from operations may not be the thing that transforms GameStop. And that has been a theme that I've been talking to you guys about for a while. Yes, it is good that the operations side of the business is no longer losing money, but it's not going to be enough to drive the type of price that retail traders want to see for GameStop out in the market. Operational profitability is just not going to be that driver. But what he said here, if you were listening carefully, is that proper use of the cash on the balance sheet when it is invested into something that drives meaningful earnings, that is the potential of GameStop. And we can all speculate about the different ways that he could use that cash. And again, over the past couple of days, I've talked to you about how we value the business right now. And that is basic math, but we can also dream about the potential ways that that cash could be deployed. And those are going to be some of the conversations that you and I are going to have going forward, now that we've covered the foundational fair value, how Wall Street is looking at GameStop now. Now that we've gotten that out of the way and we're kind of on the same page, now we can maybe start dreaming a little bit about what could this company be worth. That is different than a fair value analysis. It is a speculative future analysis, and that is a conversation that we can talk about and kind of map out what are some possible scenarios for GameStop.
Short selling in GameStop has been legendary. At one point, it probably was valid, considering, again, past management. Just about everyone's asking about three things when it comes to this. First of all, why GameStop? And do you see any form of illegal synthetic shares or whatever it might be, illegal shorting? And what are you doing to fight back against this?
Even from when I made my original investment, I was fascinated at how much hatred there was towards an investment in GameStop. It was one of those things where, you would tell someone invested in GameStop, and they'd be like, "What? What are you invested in GameStop for?" And so, there's always been a lot of people on the other side of the trade, and I have my own personal views on it. I think that it's un-American to bet against business, but it's a free market. If you want to be on the other side, no problem. And if things work out, then those shorts ultimately need a cover, and that could ultimately be a good thing. So I don't think it's all bad. I don't really have much respect for short sellers, and someone who's ultimately not smart enough to find someone successful. They have to bet on someone's failure. But if things work out, then they got to cover. So yeah. Let them short.
Yeah. And I also, to be honest with you, it's the shorts out there, particularly the large organized shorts, they've always had a platform on financial media. So they built these big short positions. Then they go out and bash the companies, which I always thought was sort of unfair as well. Have you looked into any illegal activity with respect to the shorts, the sort of synthetic shares, or anything out there where, a lot of your shareholders are concerned that these shorts never seem to run out of stocks, define these stocks as short?
I'm not scared of the short sellers. Okay. They can short the stock. It's okay.
All right. Hey, let's talk about
I'm spending my time on the actual business. Ultimately, the stock will take care of itself. It's really focusing on the business. And frankly, if people are in GameStop and they're looking to make a quick buck, then that's not the investment for them.
A couple of salient and sobering points here from Ryan Cohen to us as investors, reminding folks that if you are looking for a short-term flip to make money on a short squeeze, you're probably not in the right place. He is focused on transforming the business, and as I said this morning, taking care of those who can see the long-term future of GameStop. This is a slow grind to getting the company liquid, solvent, then profitable, and now take that cash that they have on the balance sheet and transform earnings, which will, I think, be the way that GameStop gets its next leg up in price. He completely sidesteps the conversation, the question about naked shorts and synthetics. And again, I could not have more respect for the man to take the high road here and tell you that what we want to hear a CEO say. We don't want to hear them crying about naked shorts and synthetics. We don't want to see them filing, frivolous lawsuits to keep retail investors in a play. We want retail investors in a play because management is working on improving the business. working on improving the fundamentals. And anytime I hear a leader like Ryan Cohen and some others that are telling folks they are focused on the business, then I have a lot of confidence in that leader. The leaders I don't have a lot of confidence in are the ones who have no revenue business, money losing business, penny stocks, where they don't focus on the business. They got a lot of little shell games going on with retail traders talking about naked shorts and synthetics. And in my mind, that is a lot of distraction techniques from CEOs who are not focused on their business. So kudos to Ryan to focusing himself, the company, and now you on what is important, transforming the business, improve the fundamentals. The shorts will take care of themselves.
I've always been an entrepreneur, and I invested in GameStop originally as a passive investment, actually. And as I engaged with the board, they had originally reached out to me to join, and they offered me a single board seat. And I was, again, ultimately just be a patsy, one of whatever 10 or a dozen people on the board. And as I really got an understanding for what goes on in these corporate boardrooms where, you've got these board members that are collecting, I think on average, like $350,000 a year, the average board director makes in the S&P 500 just to serve on a board and to do absolutely no work. And so as I saw what was going on, and everything was in the name of corporate governance, there was nothing about the business or shareholders or anything like that, I felt like I needed to file a 13D and really just clean out the boardroom. And so today we've got a much smaller board, and we've got a significant portion of our board that's invested in the company with their own money, and there's no compensation. And we'll see what happens with GameStop. Hopefully things work out well.
Well, I can tell you, hopefully everyone's hopeful, but I tell you,
a 13D and really just clean out the board with their own money, and there's no compensation. And we'll see what happens with GameStop.
I think that is a great place to end this video. I'll put a link to the entire interview down in the video description in case you want to watch the entire thing, because I did clip a few pieces out. But it's been amazing, the transformation that Ryan Cohen has put in place at GameStop, coming on, as he said, originally as a passive investor. Then he got invited to be a patsy on the board, and now he runs the board, and he got rid of all of those greedy corporate board members and put in his folks who are taking no pay and have their own money invested in the company. And that is an amazing thing. And I think in the long run, this board and this CEO have the best interest of investors in mind. But you might have to shift your thinking about why you are in this play. We are in this play for a long-term transformation of the company and for deployment of that cash to really bump up the earnings of GameStop and start the next leg up in price discovery. And who knows how long that is going to take. But I think if you have the right amount of patience and you're focused on those things, not a lot of the social media stuff that's going on, all of the naked shorts and synthetics and dividends, that's not what this play is about. And if you have the right frame of mind and the right intention, and you have the patience to allow this management team to deploy that cash, I think we got a very interesting future ahead. And I look forward to finding out what that future holds for us. Leave me your comments down below. I'd love to hear from you guys. Did you think that this interview was better than the one in the morning on CNBC with Andrew Sorkin? Do you like Charles Payne? How do you think Ryan did? Let me know your thoughts down below. I am Tony Denaro, and I will see you on the next video.